Forces has announced that a flying disc has been found and is now in the possession of the Army.
CBR Street Gang, over wildlife, standing by, over.
Hello, hello, hello. Let's get the microphone test out of the way here. Let me know if you can hear me across the various chat streams and live streams that are going on right now. And we're going to get started in a little over a minute here. Just wait to see if you can hear me okay. Okay, let's get the music under control and we're going to get started here. So it did seem like everyone could hear me okay. Excellent. All right. So let's go ahead and roll right on into this. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. I am your host Landy and today is November 6th, 2023. And we did have a bit of a time change over here in the United States for most places. There are some states that do not actually do the time change. So we are a little bit earlier here on the Pacific West Coast. It should be the same time for UTC. And for many of you in European countries, as you did have a time change before us in many cases. So happy to see some of you guys here already. Looking good. And we've got some of our West Coast FINRA students over here in the other chat. Hello, guys. I do know that some of you have some pretty important tests coming up this week. I want to say congratulations right off the bat on making it to the scheduling time. And I know that you're going to be working hard cramming in the rest of the testing information for the exams and the licensing exams, I should say. So for those of you who are unfamiliar with FINRA exams, you can get the basic exams to get into compliance with many different areas of the financial field. But if you want to trade specifically or go work for a trading firm or a prop shop, in many cases, they're looking for Series 24 and 57. And that's exactly what you guys are taking. So congratulations. Those are not easy exams. Congratulations on making it this far, and I look forward to hearing how you do. Let's jump into Bitcoin, though. We can see here on the daily Bitcoin chart that we have the Bollinger Bands on here, and the volatility of the Bollinger Bands is beginning to cool down a bit here as we are seeing the basis begin to catch up to the range. And we have that sitting now at 33,200. So it is right around this close open at $33,000. And that would not be an area that you'd want to see Bitcoin lose if it does head towards the basis. We do want to see that area hold to preserve the integrity of the volatility expansion to the upside here. Now, the one thing that I will point out, though, is that the lower first is above the prior breakout of the current move. Now, So while if Bitcoin did break down below the basis there at around 33 to 33.2, we're likely to see some of the major areas get hit and retested that I've talked about previously, and we'll visit again here in the Bitcoin in 60 seconds chart. But I did want to point out that because the lower first is there at around 30,800 to 900, it is above the breakout of the current move. Now, it is not above the actual breakout to new highs, though, and that would be this 31.8 area over here to around, well, it's 31.8 on the high, and the close came in at around 31.5. So realistically, what we want to see is Bitcoin still hang out on the highs here. If it is going to pull back, maintain the basis band and allow that lower first standard deviation to catch up to the actual breakout of structure from this longer form consolidation over here. So still looking good for Bitcoin right now. We do want to see a volatility cool down while it hangs on the highs. And realistically, we won't be looking for much more in terms of expansion to the upside until we see a little bit more compression. Now, that does not rule out that Bitcoin cannot move higher, and of course lower as well in this case. But if Bitcoin does regain the upper first standard deviation here at around 35.5, 35.6 area, I would expect a retest of $36,000 and 36.2 because there is a weekly there. We'll look at that in just a moment. But realistically, the top side, while this is cooling down, is going to be somewhere around where the upper second is coming in. And this is coming in at around 37,800. And I would argue that there's a weekly right up there. Wouldn't be out of the question if Bitcoin did start to recover and break out of these current highs that we see that 37.7, 37.8 region. So let's go ahead and look at that on the Bitcoin in 60 seconds chart in terms of support and resistance with the Bollinger Bands here. If Bitcoin is going to break out above the upper first, it's got the local resistance on a close at around 35.5. That is where the upper first is. We've got the wick high to 36K that we talked about. That was one of our targets from last week, around 36 to this weekly at 36,200 to 300 up here. Now, if it does pass this 36,200 to 300, you can see that there is a weekly just below the upper second standard deviation on the daily chart here at 37.7. So that would be the next big area to look for if we did see this weekly reclaimed here at 36.2 to 3. Above there, I wouldn't rule out wicks into the monthly there at 38.5 to the weekly at $39,000 to $40,000. If it did start to get a little bit higher than that, I would be aware of some violent lower term time frame rejections in and around that area. As we can see, the upper third standard deviation is just above $40,000 there, currently coming in at $40,150. Now, if Bitcoin does drop this last wick low here at 34,100, be aware of where the close open is here at 33.9. Below there, be aware of the wick low at 33.4. And then right below there, basis band, right around the close open here at $33,000 or so. Now, if that area is dropped, I would be looking down to the daily here at 32.4 and the daily, weekly, and monthly level there at 31.8, which was also the main breakout level where we saw that very long form accumulation. Now, it would not be out of the ordinary for Bitcoin to retest that breakout area. It has not been retested. So if we did see that area get retested, you just want to see it hold up on a close, particularly on longer term time frames as I kick stuff next to me here. Let's go ahead and investigate a little bit further into some of the medium term time frames and then head up to our longer term time frames. Now, the 2-day is closing with today's price action. We can see that the Bollinger Band's upper first standard deviation is right there at 33,800. So it is coming in along this close open structure on the 2-day where there is an order block candle at around that $33,800 to $34,000. Preferably, you want to see Bitcoin stay above $34,000 if you are bullish for further testing of the highs and or a break to new highs. If you're bearish, you want to see this close below. You want to see 34K close below and then start to push into the lower, 34K close below and then start to push into 33K to go retest the breakout. Now the upper second standard deviation, again, coming in there at 37,100 or so. So right in the middle of the support and resistance that we were just talking about on the daily there between those two weeklies. And the basis band has now risen to a pretty important area. This is at 30,400 on the 2-day. So if we did see a breakdown below the 31.8 level here at some point, we can see where that lower first standard deviation is on the daily at around that 30,800 to 900 area. Just below there is two weeklies, 30,600 to 300. And we can see that that is where the basis of the 2-day is coming in. So kind of, the line in the sand is really that 31.8. Below there, we're looking at Bitcoin testing down into those weeklies between 30,300 to 600, maybe even lower. We can see that the lower first standard deviation is now curled up above the prior low. This was a higher low, and that is coming in at around 26,500. So that really is the biggest area should we see Bitcoin break to the downside at any point and start cutting through some of those supports that I just explained. That would be the main area to watch, because below there it gets pretty darn bearish. Obviously, breaking down below 31.8 is going to be pretty bearish anyway if it did do that. But, excuse me, man, my voice already going today? Really, it's pretty early. But either way, I still think it could salvage itself and keep moving to the upside overall. In this case, the 3-day did just open with today's candle, and we can see that the upper first is there at 32,800. Again, 32,800 is going to be this wick low from Tuesday, October 24th. So big area locally. And you can see that also on the 3-day, it's a big area because it's the upper first standard deviation of the Bollinger Bands. We can see that the basis has now moved up to around 29,300 to 400, which is a big daily area from the prior range below. If we were to throw on some of the dailies that we had previously from the highs up here, you could see 28.4 to 6 was a big area. And then to the top side, we had the 29.4 to 5 wick lows that was holding up this high. When this area was at 29.4 to 5 was lost, it tried to regain it and then dump down to those new lows before reaccumulating a bit after putting in the slight bit of a higher low here at 24.9. So it's a key historical area. Not as relevant, though, if Bitcoin does start breaking down. We can start talking about it. But at this point, Bitcoin's just consolidating sideways. To the upside on the 3-day, the upper second standard deviation is coming in just above the wick high there. Right into that weekly area at around 36.2 to 4. And, big area. If it starts to get up there, I would be looking for, short-term, low time frame resistance. But overall, I would still be targeting a wider move up on the daily at least. The 4-day is going to be closing with the next 2-day candle. So we have the 2-day candle closing today, and then we'll get a 2-day, 4-day coming into Wednesday. Monday, Tuesday, Wednesday's close into the Thursday open. The upper second standard deviation has been opened below here, and that is right there at 35,400 to 500, depending on if Bitcoin is rising or falling away from it, currently falling. So that number is a little bit lower. 35.5 is kind of the number that I would want to see beat on a close for the 4-day to keep getting aggressive expansion to the upside. We still have pretty high BBWP, and it is over the moving average, but I suspect if we do see Bitcoin close below the upper second, this is going to slow down significantly, and we'll see the upper first and basis continue to rise, provided Bitcoin is still above them. The upper first is currently at $32,000, right in that ever important zone between 32.4 and 31.8, and the basis is well above the prior low now at around 28,600. We just pointed to that area on the daily as being a big area. Should Bitcoin, head down into those areas below $30,000 especially, but not really interested in any of those targets to the downside just yet. The 5-day is closing with today's 2-day and daily, of course. We can see that the upper second standard deviation is still being held currently. We'll see how this closes today. But this is at 34,377. Now, we still have the 5-day expanding. The upper first is likely to move up into the 31.8 to 32K area. This is currently pivoted at 31.4. And in this case, we can see that momentum still pointed to the upside here on Stoke. Today is a macro day, so we are primarily going to concentrate on some of these pivots. And in this case, we can see it's 29,600 for the 5-day. I do suspect that Bitcoin will close above there by day's end. And we are likely to see continuation of the upper second standard deviation somewhere around where Bitcoin is currently trading at the upper $34,000 to $35,000 level. I do suspect, of course, like I said, the upper first to continue up to around $31,800 to $32,000. Now, in this case, we do see expansion continuing. There is no in-trend bearish divergence to be had here on the 5-day. So this is all good stuff for the bulls currently. We have a significant leg up on BBWP in terms of its percentage versus the moving average here. It's still over 30%. If Bitcoin does go sideways during this 5-day period and close like it is now, I do suspect that we see volatility continue up, but the moving average catch up a little bit faster and shrink that 30% difference there. Now, the weekly is another big one, of course, and it is flirting in the early goings with falling down below that upper second standard deviation here, which is coming in at 34,890. So if it does fall below there, and especially by the weekly close, if it does start to close below there and lose the local range, the upper first standard deviation is there at, guess what, $32,000. So you can see that 31.8 to 32.4 area cutting right across the middle at $32,000 is really, really important. 32 to 32.1 or so to kind of split the difference, but the basis is well above the last low there at 29,160 as well. So very, very important, I would think, for the bulls to get expansion in this weekly candle and close above this 34,800 to 900 area, preferably around $35,000 to really start to get that aggressive, expansive continuation look. Right now, we do see that there's about a 30% difference between the BBWP and the moving average here. If Bitcoin does go sideways and especially lose that upper second, we're likely to see this continue to shrink its lead there over the moving average. But in this case, it does suggest that even on a downside move from the position on the Bollinger Bands and from the volatility position, that any kind of a downside move on the weekly is one to pick up for the bulls. Now, that is not financial advice, of course, but that is what is being presented to us here. The momentum indicator, this being a regular Stoke, this is a 6/3/14 255 look back, pretty standard for crypto here. This is around 29,800 for the weekly momentum pivot. Bitcoin trading well above there still. So the opportunities for continuation are still in the bull's court. We have the 2-week candle, which just opened here. You can see that we previously talked about this. And the 2-week candle pivot for momentum is going to be 30,600. Again, those are those weeklies there at 30,600 to 800. We can see that we are getting that expansion now on the 2-week. The upper first is coming in at 31,254. Upper second is here at 34,300. So we do want to see the next 2-week candle close above that upper second to maintain this nice expansive look. Will it still be expanding if we see closures in between the upper second and upper first? Absolutely. The upper first is at 31.2. So even if it did begin to lose that ever important breakout area at 31.8, as long as it's closing above the upper first, it's still looking good. It just wouldn't be looking good for immediate continuation on the daily or below the 2-week time frames until we saw it back above the local highs again. And of course, that can always take time and or set up for reversals on those lower term time frames. So in this case, we could see BBWP is only just beginning to get expansion here. This is encouraging for the bulls. So again, you know, there's a lot of bears really pushing the bearish agenda right now across various social media platforms, and especially on YouTube, funny enough. Usually a lot of bulls come out, but there's a lot of bulls flipping bearish right now on this consolidation on the daily. And they're not delineating between higher term time frame outlook and lower term time frame outlook. So they're not really describing to their audience that yes, there could be lower term time frame pullbacks, and unless we see it, you know, picked up in certain areas, you know, then it could go down further for a longer period of time. But they're just bearish in general and calling for some pretty insane downside targets from here. While that is not out of the question, it is not immediately actionable right now anyway. And these higher term timeframes are painting the picture of continuation to the upside. Quite frankly, that's, you know, we saw quite a few bears get wiped out over the weekend. So you could see that they're kind of front running any kind of a trend change even. Now, I will show you when we get to the lower term timeframes that there is the possibility for some lower term timeframe trend changes and maybe even a significant 12-hour trend change, depending on what happens in the next few days, and I'll lay out the criteria for that. But in this case, basis is moving up to that 28,200 area, well above the prior lows there. That is what I like to see, especially because we did see the basis on the 2-week get flirted with now for the second time. If it did start to head back towards there for a third time, I do suspect it would hold, but we might see some violent wicks to the downside should it ever get there. Of course, that remains to be seen. The 3-week will be closing with this week's candle, not today's candle. In this case, it is pivoted at $33,811. So with this weekly close, you do want to see it remaining in the local range, basically, for the weekly and 3-week here. The upper first standard deviation is there at 30,281, so 30,300, right around that breakout here of the prior lower high in this case on the 3-week here. Not as significant, not the most common time frame that is going to be referenced, but it is important nonetheless, as it's more of a buildup from the 3-week, 4-week into that monthly. And in this case, we can see the upper second standard deviation has been hit. That is currently coming in at 35,600. Above there, I'd be looking for pretty aggressive, expansion of BBWP. But this is something I've noted before. We have not seen it get, confirmed expansion. So we would need to really see it hang out again above this upper second, get the closure, upper first, and, closing either on or above the upper second to really get BBWP expansion. And then we need to see the subsequent next 3-week closure to confirm turning the moving average up in this case on BBWP, indicating that volatility is expanding to the upside in this case. And once we do see confirmation of volatility expansion, realistically, as long as it's in the strong half of the Bollinger Bands, it's considered upside expansion. My criteria is a little bit more stringent than that. I want to see closures maintained above the upper first. And in this case, as we said, that's around 30,300. When looking at the 4-week, which is closing with, it's closing a little bit after the monthly here, or is it closing right on the monthly? That's 27 days. It's going to be closing with the December 3rd candle. So, this has a ways to go. Closures above 32.4. Again, big area on the daily that we've talked about many times. Are going to keep that pivoted to the upside here. But we want to see closures above the upper second. In this case, we want to see that volatility expansion on the 4-week time frame. And in this case, that is, $35,000. Now, the upper first is coming in right around the close open breakout area at $30,000 for the 4-week. Again, you really don't want to see it below there on, any kind of a closing basis. But if it gets tapped on, that's fine. Don't want to see it closing down there, even if it's right on it and maintaining the breakout, mainly because of the momentum shift. And then, of course, we've got that monthly. We've already referenced this quite a bit. And if you did miss it, at the monthly, shortly after the monthly open, we looked at this and I pointed out also in a Bitcoin in 60 seconds video that every single time that Bitcoin has closed above the upper second standard deviation, which is currently coming in at 37,900, I would still want to give it a reclaim of that 38.5 monthly over here. But every single time we have seen volatility get expansion above the upper second on a monthly for Bitcoin, and I'm going to tell you right now, for really any other asset or indice that we see this with, when you start to see upside volatility expansion on a monthly time frame, that typically leads to a run of the macro highs. Whether that's local macro highs or all-time highs remains to be seen. Of course, I would first be looking for, a run of this $48,000. That's the big macro high above price action right now. And then, of course, next I'd be looking for expansion to the all-time highs on a close and then a wick basis. Now, if Bitcoin does not close above there and or even test it, we do want to see the upper first standard deviation held. That is at $31,950, so basically $32,000, which we've said many times in this stream, and it is across many different time frames. So that is going to be probably in general, that's going to be the biggest pivot that you need to pay attention to, is around $32,000, because there is commonality and confluence across multiple time frames leading up into the monthly. So, and of course we have that 2-month that just opened, and you do want to see that basis maintained on a closing basis for the monthly, 2-month rather, or bi-monthly if you like. And in this case, that's closing with the quarterly, and that's going to be around 33,600. So 33,592 in this case. And, when looking at everything that we just talked about and then coming back to the daily, it's pretty important for the bulls to hold this wick low here, in my opinion, and that's going to be from Friday the 27th. I know I have called out the up candle there from the 24th. That's the line in the sand for the local range, and that's, it's barely hanging on by a thread. Could it save itself around that area? Sure, but it would be below the daily basis band in this case. Don't want to see closures below there if you are looking for this move to continue with its volatility expansion to the upside. It would be thoroughly stifled at that point. Now, in this case, for the local range, like I said, 31,400 at that wick low, need to see that held. And then overall for this consolidation, 33,400 is going to be the number that I'm paying attention to. And of course, the basis band is currently under that area, but it's quickly rising. So we're likely to also see the basis band of the Bollinger Bands there, which, a quick reminder for those of you that do not know, that is the 20 simple. That is what that's a classic Bollinger Band basis time frame. You can change it if you like, but you're doing non-standard stuff at that point. let's go ahead and take a look at something that we don't often reference that much, but when we do, it is pretty important to look at, and that is EMAs and MAs. So we're getting close on the daily to one of my favorite crosses in the world, and that is actually, funny enough, a 200 simple and exponential cross. So for a full stack on trend for EMAs and MAs, I like to see the EMAs leading the MAs, if they are close enough in time period. In this case, you want to see the 55 EMA above the 50 SMA. We see that. We've got the 9 above the 21. The 21 is above the 20 simple that we were just looking at. And for reference, we can throw on the Bollinger Bands with this. It just does get a little bit messy here. But we can see that the, oh no, actually, I apologize. The 21 is currently under the basis band. This does indicate that obviously trend is slowing. We can see that. And volatility is cooling down. We can also see that. But this suggests that gravity might be coming for price action pretty soon. But that doesn't mean that it can't just hang out sideways until the basis and 21 catch up. But in this case, the 21 is at 33,100. So it's right on the razor's edge there at that close open on the daily. We can see that the 55 is skating right underneath the lower first standard deviation there at around 30,500 to 600. The 50 is over the 100. We do want to see that. That's very good as well. And that's kind of coming in between the lower first and lower second, and just below the lower second there. Oh, by the way, the 50 is at 29,600. The 100 is at 29,400. So there's your 29,400 to 500 area that was a big deal on the daily at the prior highs before they just broke prior to the rundown to the most recent lows, at least. Lower second standard deviation is at 28,600, and then we've got the 200 simple at 28,400, and we've got the 200 exponential or 200 EMA down there at 28,200. We want to see that 28,200 EMA, that 28,200 200 EMA. Man, that's tough to say. I tongue-tied my brain there, and and it's kind of hurting now. We do want to see the EMA over the SMA is what I'm trying to say there. And of course, we want to see both of those above the upper second, or we want to see the upper second start to really accelerate to the upside during the contraction phase of the Bollinger Bands here. And I do suspect that's what we're going to see. In this case, when we have the 200 EMA over the SMA, we've got the 50 SMA over the 100 EMA and the 55 leading those two. We have a full stack of the longer. We will have a full stack if this does start to cross back up. We'll have a full stack of the longer term EMAs and SMAs. And then it's really about getting the shorter term EMAs and SMAs back into a full stack position, as they're currently falling out of that position between the 20 simple and the 21 EMA. So we do want to see that 21 EMA leading the basis band there. When looking at the weekly, we can see that we've got the 9 leading the 21. We've got the 21 also leading the 200 here. So the 9 EMA is there at 31,265 or 268. In this case, the 21 is down there at 29,300 to 400 area. Then we've got the 200 SMA there at 28,600 to 700. And then we've got the 200 EMA down here, kind of where Bitcoin was stuck in between the two 200s there. But the 200 EMA there at $26,000, literally skating right across the bottom there, that big $26,000 weekly level. And we see the 50 EMA finally get a nice cross up on this close open into these this this prior weekly into the open of this weekly here. So we see a longer term SMA coming into a support position. But one of the big things that I do want to mention about this is until we see the 200 EMA above the 200 SMA here on the weekly, we're likely looking at this taking its time. But when we do see that cross between the two, I do suspect we are going to be off to the races. Now, this is a pretty latent cross. We did see this come in around this high that was put in on the weekly back here in 2021 from December into January timeframe. So this was your January 2021 high into the lows here in around late January, second to third week there, and then it put in a nice higher low on the weekly. That was in relation to this higher low back here from September of 2020. We then see this hit a full crossover. We have a full stack indicating that this is going to get continuation to the upside as soon as it puts in its next higher low, and in this case it did in the first week of February, and put in some nice higher highs, higher low, higher high, higher low, slightly higher high. There was our lower low, danger, lower high, and then consolidation. Now, this is also one of the reasons why we were looking at this on the longer term timeframes back then as being, a bit more bullish than many thought. And I did think that we were going to get a second run up. And we did get that. We got a daily Wyckoff reaccumulation, even hit the spring textbook, came back down, retest, and then brand new highs. And we had that full stack still going. And it's really once it started to flip bearish back here, right around that $50,000 to low $50,000 region, that it was like, okay, we got to beware. If this low gets taken, it's going to be a long, long road. And of course, the 100 held things up. It tried to pop back up. 9 over the 21 cross happened back here, though. It was pressure down, swept under the 50. And then it was all down from there. And we haven't seen, closes below that 200 simple and EMA prior to this. But we did end up seeing that in this case for the first time ever. So, but, I wouldn't make too much of the EMAs and MAs right now. It's all about volatility. It's all about maintaining that volatility to the upside and getting continuation. And of course, that's got to start with the daily. And I do like, as I said, the daily cool down that's going on right now. Now, I will say, if you look at RSI, though, this is what I like to see. Big reset on volatility while still maintaining the highs. I'm going to tell you right now, we don't know, and there's criteria, obviously, for the downside, right? Pointed out a few times now. Locally, it's 34,100. Below there, line in the sand for the local range, in my opinion, is 33,400 or 33,800 rather. Below this last wick low over here. So, local invalidation for, continuation to the upside, at least currently, 31.4, line in the sand for this particular range before really becoming much more bearish to the downside, in my opinion, is that 33,400. Of course, below there, you can call that 33.8 to 32.8 to 33K out. But below there, I do think it's a retest of the breakout at 32.4 to 31.8. Danger signals below there. But until then, I'm going to tell you my experience. And this is, provided invalidations are not hit. And even if they are locally, but it can remain above around that 33.4 to 5, this type of a look after a big move up and then a nice consolidation tends to point more towards possible continuation than not, especially considering where the weekly, 2-week, and 3-week are starting to coalesce in terms of their major pivot points Bollinger Bands, and volatility levels. They're indicating on the weekly and 2-week at least that this is going to continue to be upward facing volatility. And that would naturally mean that we're looking for volatility resets on the daily in a bullish fashion and then continuation. Now, if it just hangs out and goes the whole month sideways, it could potentially turn bearish coming into December. But, you know, we're only just starting November, so we got to give things a chance. The other thing that I will say here is there is a bit of bearish divergence here between these two highs. Yes, the technical highs are not in, but you can see that bearish divergence is forming. It's not actionable until we see the high put in. And where would we see the high put in? Locally on the daily here. Well, we've got the higher high here. A lower high would be put in technically on any close below this open from Saturday. So we've got the close open. But that's a funny looking close open, to be quite honest, because we had the close come in at 34,731, and then we had the open at 34,730. So I guess it is the same. Okay, yeah, it is the same. My brain is not working correctly. This close open is 34,700. If we see that area taken out, then we have a little bit of a lower high going on, but it's still all part of a consolidation, and it's not until we see the 34,100 area breached on a close specifically that we start looking towards the range low area. And again, take the close open first, and that's going to be at around $33,900 to $34,000. So you've got basically a $200 range, $33,900 to $34,100. That's the big area to watch if we do start seeing things head down there. And then below there, 33,400 to 5. That's the big invalidation for consolidation before looking quite a bit lower. 33,000, 32,800, 32,400. All right. I think I've hammered that point home pretty well. Now, I do want to call out that even though we're starting to see the etchings of possible bearish divergence, it is not confirmed locally. But we can start to look at any kind of an upside move back into the bull critical zone would be a retest of the local highs. Bull critical zone is right where the SMA is as well, and that's $36,000. So to be fair, the SMA is a little bit above there. That's testing into the weekly around 36.4, and the weekly is directly overhead at 36.2. So that would still, that's still my main criteria to the upside. We hit the low side of the projection at 36,000. I still want to see that 36.2 weekly tested. And then we kind of go from there. Remember that $35,000 is a monthly level. So, the longer that Bitcoin kind of hangs around there, great. And even better if it can close above, even if it's a nasty looking doji. If it can close slightly above $35,000, that's going to maintain our targets to 38.5 at the next monthly level above. And I suspect that volatility will follow through as well and continue to show us that upside target around the upper second standard deviation on the monthly. So, all right. When I said that this was a Macro Monday monster market analysis live stream, I wasn't kidding. I'm spending a lot of time on Bitcoin right now. And I want to also throw it over to some of you guys in chat. Because if you have any questions before I move on to Dixie, gold, and then traditional markets, I want you to ask me now. And we will kind of keep this a little bit of a conversational style today. So if you are in, YouTube chat, I see a lot of you guys who are watching. Hello. If you've never watched me before, thanks for joining me. I'm not having the best speaking day, but you can always check, last Friday's video is much better in terms of my ability to talk. But if you would like to subscribe, you can go ahead and ask questions in the chat down here. I see No Name Spin, Bobby, Sam, and Roca are the only ones chatting right now, but there's quite a few of you who are observing. If you want to check, go ahead and jump in. And hello, No Name Spin, Bobby, Sam, and Roca. And And for you guys over there in the other chats, if you guys have any questions as well, go ahead and ask if they are specific to Bitcoin. First question is, can I check open interest? Yes. Yes, I can. Let's go ahead and check it. You can see the last time I refreshed this was a little while ago. So, you know, I had mentioned, what was it, back here, was the first, yeah. I had mentioned that between the first and the third, we had a higher low here and a lower low on open interest, and that was a divergence. And likely what was going to happen is if this could set a low, we're going to see a lower high and then higher lows, you know, trend resume. And that's exactly what we saw over the weekend. And right now, you know, open interest is around where it was at $36,000. Is this inherently bearish in terms of the high up here? The high was put in, you know, in the low $35,000 region. Open interest spiked around where it was at 36. You know, margin. You know, it is a little, you know, allow for a little bit of margin of error. We do see open interest, you know, kind of back to the 10.5 billion. And that's kind of where things were, you know, on the highs here at around that 34.7 to 8 prior. And it's being held as support in that area. And it's back at the same open interest level. So I don't really think there's much to be made of this until we see, you know, open interest start breaking down again along with price action. So if we do start seeing an upside move and open interest comes off the board, that's pretty bullish. But if we, you know, continue to see higher lows in open interest, and then we're getting lower lows in price action or spikes down and we're not seeing open interest come down with it, it's probably going to be pretty bearish. That means that longs are probably in danger of getting taken out below this 34,100 level, in my opinion, or kind of where the first higher low came in on open interest. So if that's something, if that's something that you're looking for, you know, that 34,100 level is going to be, again, the big area to watch. The response would be like, you know, a bullish response would be, you know, this open interest keeps rising, price falls down to a key level, you know, and we see then open interest just get wiped out on the move down, and then a spike back to the upside, and or you see a big upside move and then open interest lights down. That means shorts got taken out. And if open interest spikes down on one of these key levels and it holds, that means the, you know, the long side got taken out. Those late longs got taken out, weekend longs, if you like. You know, that's more than likely what we're seeing happen. You know, and in terms of funding rate, you know, it's more biased long right now. You know, funding is fairly high across all the various exchanges. I think we're seeing the same look on something like a CoinGlass, CryptoQuant, Glassnode. Yeah, we're seeing open interest, you know, continue to head up even in the, well, it should head up over the Monday period as positions are put back on, especially for CME. But there wasn't actually that much, to be quite honest. CME was threatening Binance here, take over Binance in terms of open interest, which is what I want to see. You want to see CME take over on the open interest chart. And in this case, you know, we're not seeing anything too crazy going on here. Is open interest kind of high? Can it dump out? Yes. Is that most likely going to result in Bitcoin also dumping? You know, probably in the shorter term time frames, maybe that leads into longer term. But if we see open interest dump locally and Bitcoin's holding up, you know, above 34, it's looking good. You know, liquidations, you know, shorts kind of took it on the nose. Longs took it on the nose again here yesterday a little bit on this rundown to 34,300 or so. Yeah, 34,450 here on this chart, but I do think there were some places that got, you know, where it did run lower, and it closed right inside these wicks here, so it just basically took out all of the longers in this area, and you know, then took out some shorts on the way back up. But you know, the market is mostly long right now, so I would not rule out a nice downside move, even if it is just a lower term time frame move again. Wipe some of those local consolidation longs out. Doesn't mean it's going to happen, but it is something to be aware of. Fundamentals, I'm probably not going to be the guy that you want to go to for fundamental analysis. But if you do want to, there's really good guys. If you just go over to Glassnode's X profile, you can get in there with Checkmate and some of the other guys, CryptoVizart, and a few others that are really, really good with the fundamental side of things. But fundamentals, from my own research, are looking just fine. And that is reinforced by those guys who are experts in that field. All right, so let's go ahead and take a look at Dixie. I do think Dixie is flirting with some of the areas that we had talked about again. So we're going to go currencies and bonds. We'll go to Dixie and look at that. We've got the monthly that could paint a high, but that's not relevant right now. We had that weekly leg down to that 30 or 105 area, and we were looking for, and we almost got there. What was the wick low so far this week? 104.84. Looking for that 104.69, the nice meme number there. Below there, then we're looking at 104 even around the weekly basis. The daily trying to pick itself up off of this support area, so kind of a zone here where this high was put in, and then we saw support come in around that 105 area, upper 104 area. Now, if this area is lost, that's where we're looking for more significant downside on from the daily perspective, looking at 104 even from the weekly basis, but realistically on the daily looking at 103.50 or so, and then come back to it. And the 104 area is coming in right around these highs here and an order block with the wick low coming in at 104.02. So area of interest around here, but I would be looking for an eventual run down to that 103.5 area. As it stands right now, it's pressure down, expansion to the downside. Excuse me. Playing out a lot of bearish divergence now. The reversal does seem real, especially with expansion. We've got 50 over 20. So this is, aggressive expansion based off that Friday close. I would still be looking for 104.69 at least. If it does start to reverse from here and reclaim the lower second at around 105.22, then we can start stepping that target up to somewhere around, the lows here at 105.5 to 105.80 or so, around that lower first, which is actually about 10 cents lower there at 105.70. But I suspect it's going to be in and around the 105.50 to 60 area. So 105.5 starts to regain 106, and then we're looking back to the basis in the low 106 area at 106.25 to 106.35. So, I would expect some follow through with this. 2-day though, it could just be setting up for a bit of a range before a longer term reversal. If it is rather even going to reverse, as this was the lower second standard deviation, and we're looking at today's closure. We'll talk about this on Wednesday, coming into the Wednesday live stream. But lower second standard deviation is right there at that 104.88 currently. This is giving more of a range look, to be quite honest. We are not seeing the same kind of look on volatility that we were on the daily. We're just beginning expansion, actually. So no, we are seeing the same. I had previously looked at it before this open, so we do have confirmed expansion in this case to the downside, but it's right into support, so we are seeing that bounce. And until we see closures below 104.88 in this case, on a 2-day time frame, or in this case, the wick low here at 104.84. If we see a 2-day closure below there, then we're looking for more aggressive expansion to the downside. Hit some of those deeper targets that we were just talking about, 104. That would be, of course, contingent on taking out 104.69, but then 104 to 103.50 be the next big area. The 3-day showing that 104.31 at the lower first, lower seconds coming into that zone just below 103.50 there at 103.24. That's going to be closing with Tuesday's closure, so we'll talk about it on Wednesday as well. The 4-day is going to be closing later this week. We'll talk about it on Friday, but the basis band coming in at 104.69, nice. So big support. It's coming into big support here. But if the 2-day can get some follow through into that 3-day, it's likely we see that 104 region at minimum. 5-day is going to be closing with the weekly candle, and we've got basis there at 104.13. So yeah, that's going to be the big area. 104.25 on the 5-day close open over here. So be aware of those areas. Big supports coming in just below. Bounces not unrealistic, and we should be seeing the same look on the weekly, and we are. Of course, the weekly is turned down at 106.59. The 5-day should be matching, and it is. The 4-day is at 106.75. 3-day is at 106.67. And the 2-days at 106.31, with the daily coming in now at 106.21. So realistically, if we start seeing this reclaim the 106 region, then we should be aware that it could start to turn some of the medium-term time frames below the weekly that may lead into a weekly momentum shift back to the upside. As it currently stands, it's all pressure down right now. But got to have the invalidation, I would say, back above 106, and things start to look a little bit more like a longer form consolidation, and then we come back to it. Now, gold is threatening to put in, everyone's going to be drawing tilted head and shoulders here. And we see the basis has now risen above this last wick low there at 1953. We're not reading Dixie anymore, Landy. We are reading something else, and that would be gold. In this case, upper first standard deviation is there at just under $2,000 at 1998. If we see that reclaimed, I'd be looking at this local wick high at around 2004 to the close open over here at 2006. Above there, we're looking for 210 to 216, and above there, 220, 225, 230 to 235, and possibly a move to the upper second standard deviation on the daily there at 240 to 250, 2040 to 2050 rather. A tap on the basis band on the daily is not out of the question. It needs to hold that area and that 1953 wick low. And the basis is coming in at 1955. That is going to continue to move up. If it does start to lose that area, pay attention to the close open over here at the 1930 to area. I do think it would slice through and start testing this last close open. This order block's lower side here is coming in right at that lower first area at 1910 to 1912. That's the absolute line in the sand for this particular move. Below there, it's right back to the lows again at 1900, upper 1800 area. Lower seconds all the way down there at 1870. So definitely line in the sand. It's going to be around this order block wick low. For this particular move on longer term time frames, you start seeing it fall apart on the daily. Obviously, it's going to most likely end up bleeding out into the longer term time frames. And again, that wick low is actually at 1908. So I'm a little bit more aggressive with my invalidation being below the lower first here at 1912, 1910 region. In this case, local area, if we do see this last higher low, wick taken out at the 1969.81 area. Nice. That's, going to be around this close open at that 1970. And then we have to start looking at that wick low to basis band at around 1950 to 1955. If we do see 2K taken out, I'd be looking back to the highs again, somewhere around 205, 210, 2005, 2010, and then I'd just do $5 markups basically up to the weekly there at around 2015 to $16, and then I do think things would aggressively mark up above there as it would be a breakout. So looking still pretty good. Momentum has shifted to the downside. 2002 is the number to turn it back up. But again, this is a consolidation. This could easily turn right back up on any closures back above that upper first. I would say that this is looking more like it's going to continue to consolidate a little bit. The 2-day is also also indicating that 1984 is a momentum pivot, but it's kind of redlined up there. It's still got like a closure or two. No, actually, it's under the moving average now. So, it's looking more like the daily's going to have to consolidate. But even when this is BBWP is cooling down, we're getting that residual expansion as the basis moves up. So as long as it's closing above the upper second standard deviation at 1978 or so, that does bring into play that upper second standard deviation on the 2-day. And of course, it's lining up with a key area. And that's going to be our 2034 to 35 weekly up there. So big area. When looking at the monthly again, just note that this area is right by the upper first, the area that is currently being tested, that is, and that is the 1968 upper first standard deviation. Upper second standard deviation has now moved up just below this big weekly area, monthly area, and that is $2,080. Upper second is right there at $2,076. So, as long as it's closing above 1970, it's got the opportunity to mark up to that area. And if it closes the monthly above 1934, it's going to start looking like that area is going to be the next destination. So keep that in mind. And this is the wick high, I should say. That's the wick high of the current area. I think I called it a weekly. Just so used to the white lines being weeklies on Bitcoin that I'm calling it weeklies on other assets and indices, and it's not. It's just a key level. In this case, the wick high on the monthly. Now, when looking at traditional markets, we're getting a little bit of a pullback. Expected. We do have higher high structure on Dow. I don't know, and I'll go look, but I don't think we have higher high structure on a close. Now, we do have higher high structure on a close for Dow, so I would expect some consolidation, maybe another push, and or if we do see this move down below the wick low of Friday's candle, that is coming in at 33,946.60. So basically below 33,946 on a close, 3 candle high. Looking to that upper first as an area that needs to be held as well at around 33.9. Below there, I'm looking for higher low territory. It can come all the way down to the basis and be fine. It can come all the way down to the lower first and still be fine to try for a higher low. And in this case, the upper first, like I said, is there at 33.9. We've got the basis coming in at 33,426 and the lower first coming into position there at 32,960. I would say 33K is what needs to be held. That would be quite a drop, but that's from what I'm seeing is that would be a nice trend shift. We do have a trend break on a close, but until we see the actual wick high here taken out, and in this case that is coming in at let's throw the magnet on there. That's coming in at 34,147. We need to see that area taken out to go test the upper second, and that is coming in at 34 364 above there. That would be a reclaim of this low if it could get above there. Currently, it's still above this prior low. No, it's not. It's above the wick. It's kind of flirting with it right now at around 34.29, slightly above there right now. But a reclaim of this low wick here at 34.350 on a close by the upper second. And we start looking to the high side structures. Maybe this a little bit of a pit stop just above there at 34.5 to 6. And then, 34.7 to 8, and then $35,000, 34.9 to 35. Right now, a little bit of a pullback on a Monday, not unexpected. We've got 32.763 on the daily. Momentum is pointed up. Looks fine. 2-day is going to be 32.600 basically. We can see the upper first standard deviation just above the local wick highs here on the 2-day. This is going to go one of two ways. It's either going to reject, which is still bearish from the band's point of view. And likely it's headed back to, mid 33s, upper 33s at the basis. If it loses that, lower first is coming in the same area around 33, 33.1. So, what's the likelihood of that happening? Well, I mean, it's quite high if it puts in a high, but we haven't seen a high put in just yet. So if it meets the criteria of putting in a structural high on the daily, then we can start looking in those areas. 32.6. This is like an inverted head and shoulders on momentum. And because it is close over close momentum, you can take these as structural. I like if you're going to do patterns and trend line breaks, I prefer them on a regular Stoke, not a Stoke RSI. Again, a regular Stoke measures close over close price momentum, and in this case, this would be an inverted head and shoulders on the 2-day. And it would be looking like it is broken. Has it already gone for the momentum measured move? It's kind of remains to be seen. It's kind of there. It's got a little ways to go, about the 55, so just above the midline. You could take it right to where it broke, and maybe 55 to 60 area on momentum, and then that it would be right up against the bullish control zone or the edge of the bullish control zone, which, to be fair, can be a rejective area. And yeah, but if it was going to continue up, I suspect if we see 2-day momentum continuing up, then that's only going to happen on closures back above the upper first here on the 2-day time frame at that 34.226. Above there, that's a reclaim of the 2-day low over here, and then we start looking back to the highs. We'd likely see this head up somewhere around the upper $34,000 to $35,000 area, low 35s. The weekly, nice big candle here. The argument against that is some of the downtrending big candles just immediately keeled right over. Back here in March of 2022, right off the all-time high area. Yeah, you could make that argument. One of the things that I would argue, is not as relevant there is this is coming off of the actual oversold zone. Nice cross to the upside, 32,851, looking good. It's basically above 33,000. This is looking fine to keep continuing up. The basis band needs to be recovered to go test the upper first. Basis band is now at 34 to 37, so right around where that 2-day upper first is. The upper first on the weekly is right there at that lower high, and that's at 35. So again, that's the same areas that we just looked at on the 2-day and daily. That's going to be the same thing that we're looking at here on the weekly. So above 34,250 or so, we're looking to 35 overall. It doesn't need to get there right away, but that would be the next big area. Above there, it's right back to the local highs at 35, 6 to 8 or so. Looks pretty good, to be honest, on the weekly. We'd have to see what that looks like rolling into the monthly, of course. And, if it does put in a high here on the daily, I'd be looking for higher lows currently. But I don't think it would race right back down to the last low. We've got a trend break here. We've got a trend break here. So higher low, you'd probably want to see it come in around 33,200 at this last high on a close, or a close open, I should say. NASDAQ did not make a higher high, but has a nice trend break. So we did see that downtrend break. It's right around the upper first. You expect resistance here after passing the basis. So this is nothing out of the ordinary. It is a lower high than this high over here, but that's not the high that we're worried about. This last high is the one that you needed to pay attention to. It gapped up and already took that high out at 14,750 to 775. I would prefer to see it on any mean reversion. It hold the basis basically to that area, and the basis is coming in at 14,782, and I would give it down to 14,750 or so. If it did want to gap fill, that's fine too, but I'd rather not see it close back below here if I wanted to remain bullish. Of course, I would then be targeting down to the lower first. Could still put in a higher low down there, of course, and that's coming in at 430, 400 area, 440, 430. Now, that's quite a drop though. That's a 300 point drop. So prefer to see it hold up there. That would be very strong. Hold up at the basis would be even stronger. Below there, of course, it's right back to the lows at the lower second. And then we come back to it. Hey, just so you know, over in the other chat there, where you guys are doing the training, you guys are calling me from your office. You need something? No? Okay, cool. Okay, I know what that's about. Yeah, it's an automated. Cool. Yeah, I thought maybe for a second, like, if you couldn't hear what I just said, I was going to actually answer it. All right, so, daily looks fine above 14,300, 14,250, 14,300. If we do start seeing the expansion back to the upside here, this is more set up for a range right now, but we would absolutely need to see closures above that upper first at 15,132. When looking at the weekly, nice big candle there. Set the low beautifully. I believe, these are all coming off of bullish divergence as well, if I'm not mistaken. Yep. And then we're seeing the etchings of volatility, kind of skating back to the upside here. This is really just a cool down period. From the weekly perspective, though, if we start seeing this close back above the upper first at around 15,420, nice, another meme number. If we start seeing it close back above there, we are likely to see this run the highs, the local highs here, 15,700 to 16, and then probably get expansion to the actual all-time high. So just be aware of that. This could go the other way too. So, it could, start closing back below 14, 100 or so at the lower second. It's going to be right back to the lows and then probably lower if it continues to close down there. As this is set up in a giant range right now in terms of volatility. Upper second, 15,800 or so. Lower second, call it 14,3 or so. Big range on the weekly. That does give, it gives the bulls plenty of time to talk about all the bullish targets, and it gives the bears plenty of time to doom. So that's what happens in giant longer term time frame ranges like this. Weekly is turning up on any closures above that 14,500 area. looks good right now, holding above 15K. So if it can maintain above 15K, especially, which is the basis band on the weekly, we're going to see this most likely head up into the mid $15,000. Test that 15,420 area. Get all the meme numbers in. Trying to see if there's any other meme numbers on the weekly here. Nope, nothing coming up memes right now. Let's go ahead and take a look at SPY then. And we can just keep it on the weekly chart, and then we'll go to the daily. Coming off that lower second and third area, powering right back up, setting the low on a close. Of course, still needs to get above the basis, take out those wick highs to go test higher. And that's at that 438. That has not changed. So we have the same criteria, 438 to 440. We see it, trading above there. From the weekly perspective, then we raise our targets overall to that upper first at around 450. Of course, above there, it's the highs again at 460, right? So by that upper second. If we do start seeing the lower first close below at around 427 to 430, I would be looking back to the lows again, to be quite honest. You got the wick low there. They could try to hold at 420, but I'd be looking right back to 415, to be quite honest. Maybe set it up for a higher low there. Let's look at the daily, though, and see how viable that is. It is above the upper first, so this is actually a little bit stronger right now. If it can close up here, you don't want to see it 3 candle its way down, so we don't want to see closures below 433 for at least immediate continuation to try and test the highs. We're looking for the highs there around 435 if it can get there to that 438. So, that's going to be the big area to the upside to watch out for. And then it's 440 to 445 by the upper second as the next big area. Now, as long as SPY is closing above the upper first, it keeps that upper second as the next viable target on expansion. Now, it's pretty highly volatile, so it could do it, but it's got to maintain the daily basis band. We're talking 425 to 420 at the weekly, so above there looking good. Below, put in a 3 candle high. I'm on higher low watch for this move. You'd prefer to see it around the 425 to above 425 on the daily, or above the basis, but it could still come down to somewhere in between 420 and 425 to do so. Below there, it's quite a markdown right back to that 418 area, then opening up the lows again down there to the 415 to 410 region, maybe lower. But in this case, that's not my first take. Bullish on momentum above 414, 413. And then the weekly turning and being above 420, that's going to be the key areas to watch on a weekly close and daily close. Above there, looking pretty damn good to keep testing higher. Lower term time frame consolidations, just fine. I see a 3 candle high looking for a higher low. If we don't get it, you'll start seeing it close back below basically 420, and then we look out for the possible lows there and or a low side higher low. That looks pretty good. It doesn't look bad at all. Let's go ahead and head back to Bitcoin here. Trading about 35,100, kind of where we left it. Let's see what the 15-minute looks like on the volume chart. Again, remember the teal lines are just levels in between our our continuation levels. Losing my voice here, so let's go ahead and turn off the landing bands. And did I actually lose my voice there? Maybe. Give me just a second to take a drink. All right. We've got the volume chart here. The white horizontals are the wicks, right? The high volume wicks. We've got the yellows are the closes. Bitcoin is still kind of playing in between this 35.5, or in this case 35.450 close on the 15-minute up here, and that 33.985 or 34K close down here. Now the levels in between, yes, they're temporary swings in between the continuation areas. Those are marked in teal, and they're all on the lows. Now in this case, we don't mark any of these highs because they're in between levels here. And when it's dipped down, we had high volume down here, high volume here. In between the bigger levels. So if you want to scalp, you can do that. But realistically, the zone that we're playing in right now, or the price action's playing in, is $35,450 to $34,000. If we start to see $35,450 taken out, we're looking at the deeper 35s to $36,000. If we see 34 taken out, it's a long way down to 31.8. That's where that retest comes into play, because that's the last high volume high that was put in prior to the consolidation that we're seeing right now. So pay very close attention to the volume map that we've been building. It will serve you well. Now, I will tell you, this last little rundown to this zone of interest between these two lows, this low here and this wick low here, which were higher volume, brought about a ton of volume here on spot price. Of course, this was where we saw that weekend long liquidation. And, you know, we did see on the other side of that a short liquidation as well. Not huge events, did not take off massive amounts of open interest, but has set up for this sideways range. I mean, this is just chopping sideways right now. Not much interesting outside of that. Just be aware of daily shifts in momentum as it relates to volatility. Right now we're in a volatility cool down, so mean reversion is the name of the game. Currently it's going sideways, and that mean reversion is the 20 catching up to price action. So that's where we're seeing this as a much more bullish consolidation. Yes, there's daily bearish divergence building on the other side, but that does not mean that it will not test higher. It just means that you need to see that divergence start to build and then confirm. We are just seeing it build, not confirm. So until we see it confirm, we're not looking for a big breakdown. Same thing that we talked about on Dixie and its multi-week run up and all those dailies that just kept on rolling on. We need to see confirmed bearish divergence in trend. And we see that expansion is giving us the upper end of the targets around that weekly at $37,700 to $38,000 right now, which just so happens to be the upper second standard deviation on the monthly. And then revert back to the mean within the range now is in play. So, you know, until we see the range breakdown, I can't be bearish. It just doesn't meet the criteria. So looks good for now. I suspect early pullback in traditional markets this week, and then we kind of evaluate. But I think they're ready to try to keep moving up as the 2-day and 3-day begin to follow through with their momentum shifts as well on traditional markets, which we will check in on Wednesday again. So let's turn up the music. Let me hunt around the chats here and see if there is any questions. Let's go ahead and get the music back on here to cover for the silence. All right. Yes. Yeah, I mean, I can look at that. No problem. So I got a question over here. Hey, can you look at treasuries? I'll look at it quick. Seems like my voice has come back a little bit. So let's go ahead and look at treasuries. And we'll do this with Landy bands on the daily time frame. So we're looking at, you want short-term yields and long-term yields. You just want the 2, 10, 30. Okay. Cool. We'll just do the daily for right now. Daily's looking like it's coming into the bottom of the lower second and getting a really nice bounce. I suspect that momentum's going to shift, and it is. 4.94%. Would cross it back up, so it's not ready just yet, but you know, if it does play around here a little bit more, it's likely to set a daily low pretty soon. Actually, we should look at the weekly. Yeah, it's a lower first, so could it come down to 4.75? Absolutely. I would be looking at this as a nice compression before a possible reversal, but I'm not. It could very well play on the highs for much longer. 5.14 is going to be the momentum pivot for the weekly, and we can see that it's at well, it's at some of the lowest levels on the weekly that we've seen since 2018. Okay, now I know why you wanted me to look at this. Yeah. All right, so could it be putting in its was this its final drive? You know, you might be right. You might be right. I couldn't tell you if, you know, if that's going to play or if it just goes into a longer form sideways consolidation, but this is the lowest volatility we've seen on the weekly since 2018. So, and it's coming off of just like massive bearish divergences. But when you're looking at this, it kind of already ran the midline, you know, back here in early March of this year. And if it goes to the bullish control zone, that's back at 5.2%, which, you know, turns the weekly back to the upside. And 5.2%, by the way, would get expansion on the Bollinger Bands to the upside, indicating like much higher yield. Yeah. So it's really all going to be about, like, I would say below 5%. You know, we're probably looking for a little bit more downside. But above 5%, might want to watch it. This thing could easily start ripping towards that pivot on the weekly. And if it starts closing above there after this kind of a squeeze on Bollinger Bands, then it's looking for, like, we're looking at aggressive higher yield on Treasury notes. On the other side of that, if we start seeing the lows break down on a close down here at 4.75, you know, where the lower second is on the weekly, I think weeklies are going to be the way to go with this, bud. It's not even worth looking at the daily. Yes, it's bouncing. That could lead into the weekly, but just take it in the context of the weeklies. For below 4.75, we're looking at yield aggressively falling with a 0 BBWP. I mean, like, basically the tightest this has been, you know, in 5 years. So yeah, that would be, yeah, aggressive. I'm talking aggressive downside. We're looking at, you know, coming back to 4% and, you know, upper 3%, you know, areas that we saw from back in March, and then probably continuation from there as the rest follow through. You know, the monthly then starts to turn below 5, which it's likely going to turn, and then you got the quarterly turning below, you know, 4.94%, which it's trading below now. It's more downside angled, yes, on the very long-term time frames. but remember, it can hang on the highs. It's, you know, the quarterly's upper second is up there at 5.77, you know, almost 6%. So just remember, from these longer term time frames, it can hang on the highs for a long time. 5 years atop. So it's a bit different. It's not coming off the lower standard deviations. So 5 years, you know, atop on the weekly, looking at 4.61%, closing below 4.87. We're looking at the basis as being like the big area of interest. Could it come back up and reject this area? It's only one drive of bearish divergence so far. So basically above 4.66%, you know, it can work its way back to the highs at 4.89, and maybe even test that pivot around 4.87. What is the daily saying? Daily saying below 4.76. It's no go. It is coming off the lower second, so watch if it puts in a low. That's what I'm looking for there. We might as well look at the 10-year. Yeah, this is not quite a breakdown, but painting a top. Retest the upper first here on the 10-year. If it does close above there, that opens the highs up again at 5%. What's the pivot? 4.93. It's quite a ways away from there. What's the daily looking like? Daily's looking like 4.86, so it's still got quite some work to do on the daily, but it is again bouncing off the lower second. So watch for a possible low being set. Realistically, that's for the 10-year. That's not until you see it closing back above 4.73. Should be quite an aggressive upside move, and it's getting a pretty decent upside move right now. But realistically, the basis is in play now at 4.33 to 4.21, and the lower first there. Yeah. What would that point? Yeah. So good question. With the 2-year looking the way it does, where it could very easily put in a top, you're looking at the yield curve, the uninverting, basically. We have an inversion of the yield curve, shorter term yields up over longer term yields. You just see the long end of the curve catching up and then overtaking, and that's what we are seeing in general. At least we're starting to see that. I mean, the 2 years back above the 30-year, but they're floating with each other at this point. If the 2-year gets downside expansion, the long end of the curve is going to start picking up aggressively, and you can see that it's in a bullish posture to do so. I would say, below 4.5, the monthly starts looking pretty toppy, but this could move down aggressively and still be bullish on the quarterly. Quarterly is 4.65. It's trading right around the quarterly. It could still play around the highs here though for an extended period of time before actually moving down. But it's just something that we'll have to check on in the monthly, towards the end of the month, and the weeklies leading into that. This looks as though it wants to set up for a higher low. I wouldn't consider this a higher low. Some would swing high, swing low for a higher low, but in this case, in terms of candle structure, this was kind of just a straight move up, and this would be its first try for a higher low since August. So if it's going to try for that, it's going to go significantly higher. 30-year, that was quite a downside weekly move for the 30-year. 5.1 is the weekly pivot. Daily, we're looking at possible 3 candle structure off the low, so watch to see if a low gets set. It's trying today, so it's coming in. We're coming in a high of 4.835. If it does set a technical low above that wick, then you're looking for the 3 candle low at that point, and that'd be closing back above the open at 4.93, basically back above the basis, and then it can run the highs again, the local high up there. But 5.4 is pressure down. 5.04, I'm sorry. Weekly's pressure down below 5.1. We should go out 1 decimal place though. Yeah, it's 5.1 either way. As long as it's above the weekly upper first, it can run the highs again at the upper second at 5 and above 5.2. Yeah. So Powell is speaking this week, so it's we might want to pay attention to that on Wednesday. He's got 2 speeches this week, and we'll follow up on Wednesday then. Thank you for asking me to look at this. Again, my personal thoughts are that if the 2-year could go one of 2 ways, and that's going to be the one to watch in my opinion. Coming off the lower first, really tight consolidation. If this starts to expand down on the weekly, we're looking at yield curve uninverting, or the long end of the yield curve catching up, and the whole thing kind of going back and normalizing again, instead of living with this inverted yield curve with short-term rolling of treasuries is kind of the name of the game. We have seen quite a shift into the longer end of the yield curve, but it's nothing too crazy just yet. If it uninverts, everything will crash. I mean, history says that it comes shortly thereafter, but we're also they've been doing very different things than they did in 08. Just understand that. When we see it, if we do, and it happens aggressively, we're definitely going to be talking about it. Yes. We're going to go based off what volatility says, not what the gurus on crypto Twitter and macro experts that have been calling for, market to melt down to brand new lows. Meanwhile, SPY is up 30 to 40% off its lows. So those people that are advising others and screaming about all this and recession, and we didn't have a recession, we had a recession, or we're in a recession, or we're not, or it's all going to fall apart, and look at these horrible numbers everywhere. Those people are morons. Are they not valuable? They're valuable in the sense of we have a good idea of the fundamentals of what's going on behind the scenes, but what makes them morons is they were dissuading people right from the actual lows, the major lows that could turn into macro lows, by the way, and we could see higher highs. But either way, they're basically telling people to fade the entire way up, and got people wrecked because they're stupid. Since last year, I mean, these are the same bears who were calling for lower than 15.5 when it was clear that it was putting in a low and breaking out above 18. Oh, it's fake out. It's going to 10-12K. Okay, sure, buddy. Those same people still clinging to their, they're just moving their invalidation higher and higher. I mean, what are they going to, the next place is going to be 48K. If it doesn't break 48K, 8K is imminent. Like, okay, sure. You've been bear posting the entire time on both sides of the market, whether it's traditional markets or crypto, and people and those that follow them have missed entire swaths of moves. Yes, Bobby, because they're over here asking me about some of these macro experts. So I think the question was specific for you, Bobby. The question was specifically, do I think macro experts have any value? Yes, they do in terms of fundamentals. But if you're trading based off of their advice, you will lose every time. They're good. They have their value. And I spend plenty of time making fun of even the macro experts in-house over there with you guys. Okay? That doesn't mean that I don't like them or they don't have their value. But they are not traders. That's why they're not on the risk side of things. It's why they don't do RM. They are macro experts on the fundamental side of the markets, on what the projected outlooks are for the fundamental side of the markets, not for the freaking chart. And this pisses me off because and for those that are not in an actual shop or being trained to go work on the floor of an exchange, that these are the same, all these macro experts, whether they're on crypto Twitter or traditional markets or whatever, these same morons were calling for this right here to break down the exact lows. They were calling for brand new lows, ignoring the fact that here on the weekly for Dow, for instance, yes, there's only the Magnificent Seven and yeah. That's why you have options in the market itself. You can buy the index. Yeah, you guys know that. Oh, okay. Well, he didn't. He's new. He's doing, what are you doing? SIE exams? Okay, cool. It hit the freaking higher, it hit the lower high from the move off the lows in 2020, right? This is fucking two major supports. One pre-crash, one post-crash. If you ain't fucking buying this area, at least for the low term, they were calling for it to take out the lows down here from the crash in 2020. Yes, it's the same people. Right? They weren't even looking for support. Why? Because they're not looking at charts. They're not actually watching the auction, the live auction. That's what this is. Everybody's like, charts don't matter. You should watch, pay attention to the fundamentals in the news. Really? Charts don't matter? It's a fucking record of the actual auction that's happening, you idiot. So anyone that tells you that you do not have, you shouldn't pay attention to charts, those stupid lines on the screen. You should pay attention to what's happening. Fuck those people. You should never listen to them. They have no idea what they're talking about. You're literally looking at the auction, the historical data for the fucking auction that's happening. That's the buying and selling. That is all going to be based on the fundamentals that people are looking at and what the market desires. So fucking ignore all those people that are the quote-unquote macro experts like that. Look, we have macro experts over there, all right? They do their job and they're damn good at it, but they're not telling you how to chart. They're not telling you not to look at the charts. They understand their place, that they're a component within the system to help analyze for specific value investments and specific risks on the other side within the broader context of world economics. They're not sitting there going, oh, it's going to crash below the recession. It's going to bring everything below the last lows and it's going to be a depression. No, because that is not their job. And if they ever do that, they're going to get fired. So when you see pundits on TV, when you see pundits on Twitter or YouTube, just know that most of those macro experts don't know dick about dick. And Dick knows everything. Yes, I'm saying that because Dick actually does know everything, and he is one of the macro guys over there. So go ask him what he thinks of these macro experts that have been calling out the recession and it's coming and Meanwhile, everybody that's bothered to listen to those fucking morons has missed a long position that could have been put on with an invalidation over here, and even a conservative move to the last high, which, by the way, conservative move to the last high was a 2.23 risk-reward ratio, and you can even move that up. You could say that you didn't buy until the low was put in, and you're still at a 1.33, and you could just move to the last low, and you're at a 4.77 risk-to-reward, and it went much higher. But they told you to fucking sit out a massive fucking move to the upside in markets because they're idiots and they don't trade. They don't put their money where their mouth is. So fuck them. You don't listen to them. It's the same with the bears in crypto. You had a 25% run up in Dow. Well, it's nothing. It's a lower high. Yeah, no shit. But did you not trade it? Because if you didn't trade it, you're a moron. And you shouldn't be giving anyone advice. How about NASDAQ? Man, it's fucking yes. Yeah, no, you hit the right button, buddy. Yeah, you knew. Oh, well, they're encouraging you. 52% off the low. Oh, but it's in this entire time that it was going up, they're scaring the shit out of everybody who's making the trades that don't understand what they're doing. Guys who understand what they're doing were the ones fucking running the market up and enjoying the entire trip up. That's why we were having so much damn fun. It's why you're seeing expansion happening over there. SPY? Simple. Off the low, these morons told everybody to sit out a 32% run up. Which, by the way, SPY hit its higher low because it had a higher low on the weekly post-crash in 2020. The only one that didn't was a front run on NASDAQ. So we hit our primary targets to the downside. And And you had the moron brigade come out and talk about macroeconomics and try and convince everybody that they know what the fuck they're talking about when they relate that to actual trading in the markets. Man, it just pisses me off so much. No, and yes, there's people that I respected at one point, and until they decided they were going to transition to become macroeconomic experts within these markets, especially when trying to relate traditional markets to crypto. One, I had a really good laugh when they tried to explain themselves to me. And then I just watched them slowly get eaten alive by their own bullshit analysis, because it's very clear that they missed out on the move up. Oh, even if they're right in the long run, doesn't matter. If they're really, these are ostensibly trading accounts, and you would be fired the instant you missed that fucking low at a major support. I'm sorry, you're gone. You're not going to survive in this market. And look at where the weekly's bouncing from. It's bouncing from the highs off the lows, from the trend change. This is an uptrend. Yes, we have a short-term downtrend within the context of a wider uptrend. Until we see the fucking last low taken out, it don't matter. 380, 381. They can cry and celebrate the whole way down there. And the only time that they can actually claim some victory to come back to the most recent lows is if 380 gets closed below. If it doesn't, they can just keep whining on every bounce. And this is something you guys who are new are going to find in this market, across traditional markets especially, because every fucking guy, every fucking money market manager, every asset portfolio manager guy who doesn't have a fucking clue but's got liquidity is going to tell you all about all the things that he knows while he fucks up his clients' portfolios. That's why you're being trained by guys that actually know their shit. Yes. It's not how you make money for your client. Yeah, you don't make money for your clients by and increase their portfolio, thus your portfolio and total assets under management, unless you actually trade the real auction. I agree. Everybody thinks that they're yes. Everybody thinks that they're what's his name from The Big Short. So yeah. But for Bitcoin, nice bullish consolidation so far. Below 34.1, danger. Start looking down to 34.4 and basis band. As long as it's holding above there, around 33.4 rather. And the basis band at like 33.2. It's looking good. Below there, we're looking for the daily 32.4 to weekly. Daily, weekly, monthly at 31.8 to get hit. Big problems if things begin to break down from there. Then we're looking significantly lower, at least in the shorter term time frames below the weekly. So potential upside, take out the highs. 35.5 would get it there. Closes above there, run the high at 36 to 36.2 above there. Upper seconds coming in at 37.7 to 38K. Could likely even see a wick through there to the monthly at 38.5, weeklies at 39 to 40. Above there, it's looking pretty exhausted, but depends on how long it takes to get there. So this is an analysis for, the next couple of days, but if we see tight compression and then re-expansion, it's, it could go even further. The upside and or the downside, especially on expansion. Just note that downside expansion on the daily would be mean reversion on the higher term time frames, which would be bullish. Yes. No, I'm not going to mention the names of the people that I'm actually ranting about, but there's one gentleman you can figure out. He used to do a lot of Glassnode stuff on Bitcoin. Really pumped him up, and I recommended that everybody follow him. And then he transitioned into I'm this macro expert, and we haven't had a recession yet, and it's going lower than this, and it's going lower than that. And for like a year, he'd been just pumping out the most nonsense after one of the strongest bounces we had seen in years off a low. Like the strongest bounce we had seen since, 2020. And dude is just like full on bear mode. I'm like, I hope you're shorting. I hope you've been shorting the entire time and getting your fucking ass blown out through your mouth hole. Because all you're doing is talking a lot of shit. Yeah. Oh, yeah. Above the upper first. That's 35.5. Sorry, my cursor was covering it. Yeah, that's where I'd be looking for the highs to get ran. 36 to 36.2. Hi, Cheryl. So we going up? No, it's consolidation. So, and I'm sure you just heard me call out the targets. 35.5. Above there, it's above the upper first. Probably going to run the highs at 36 to the weekly at 36.2. Above there, 37.7, 38K is fair game by the upper second. Coming off a fresh, hot Landy rant about macroeconomic morons. That's what I'm just going to call them. Just remember, Jerome Powell has a lot of tools at his disposal. So, and he does. And side note, Jerome Powell has actually been doing a good job. Just not a good job for the American people. Okay? So understand, in the context of the banking side of things, he's been doing a good job. Okay? But in the context of the average U.S. citizen, he is destroying them. Okay, little guy, poor get poorer, rich get richer. That is what central banking allows for and facilitates. Of course, with help from the government, in this case, the U.S. government and Congress. So money laundering and rich get richer and, say we're going to tax shit out of them, but really tax the middle class and poor into oblivion, whether it's a soft tax or an actual, IRS statement. So Powell doesn't need a backbone. He's got plenty of backbone. He's working for the bank. That's what he's doing. He's the Fed chair. I mean, he's doing what's best for them. And he's walking a very tight, rope here. And as this has developed, he has held things together for them just fine. I mean, they've literally been doing bailouts behind the scenes. I mean, that's what SVB and SBNY, and they kept those programs open, and all the bigger banks are swallowing up all the regionals. Regionals have been collapsing. Commercial paper is collapsing. What do you think they're doing? They're saving them on the side. Like, will it become a much bigger problem? Sure. But for right now, he's doing just fine, silently bailing everything out. Like, you can't say he's doing a bad job. He's meeting the objective, right? Now, in terms of the effect on normal people, it's absolutely atrocious. It's awful. It hurts. But, Powell said, we got to go through a little bit of pain. Meanwhile, people's entire lives are being wiped out. But in the context of central banking and centralized systems like this, you don't matter. The system matters. Understand that. Why do you think we're looking at things like Bitcoin? If you're so against this system, okay, I'm going to paraphrase. Basically, if you're so against the central banking system, then why do you operate in it, teach FINRA, so on and so forth? Because you still have to, you and I and everyone here still has to deal with fiat currencies. And now are you going to ask me if I think that there's ever going to be a Bitcoin standard? No, I don't think there will be. Not in the way that it's been pitched. Do I think that Bitcoin will infiltrate the financial systems around the world? It already is. Do I think that it will become the base layer of electricity? Yes. therefore infiltrating every system that much further as it becomes ubiquitous across the entire connected landscape through power and networking. Yes, specifically power. We're talking energy companies. Yes, it's already being integrated. You guys already know. It's already being integrated all over the place. So, and you have to be able. You have to deal with the system that we live in. So, you better understand it to the best of your ability so that you can make money. And if you want to move it into the things you want to move it into, property, Bitcoin, cryptocurrencies, I don't care. You can go and spend it all on blowing hookers. I don't really care. I mean, it's more about understanding how to make that money and operate within that system. So, no, please don't take the hookers and blow option. No. I prefer you invest in sound investments. Right? I'm not the financial advisor, though. I'm the trader. You should invest. Oh God, this conversation is turning very into not safe for work territory, and you guys are at work, so just be careful. There is HR, and HR is in the chat with you, and HR just made a joke about it. All right, so I guess that's the green light over there. Have fun, guys and gals. For those of you not in these chats, I wish you could be, unfortunately. For those of you on YouTube especially. But yeah. What else? Do we got anything else? Any other questions before I get going here? No more ranting. Don't get me on anymore. No, don't encourage me to rant. No more rants. I almost lost my voice at the end of just streaming in general, the regular analysis. You're going to try and kill me, get me ranting some more. Yes, in general, above 34,000, good. Below 34,000, bad on Bitcoin. I mean, not like bad, like everything. It's going to collapse. Zero incoming. No. All right. Cool. Well, I have the feeling I've got the degen chart on, so we're hitting all aspects of my audience right now. Yeah, above 34, it's fine. 34.1 to be specific on a daily close. Yeah. I got people arriving late from that side, and I think there's quite a few people bouncing in and out that were late on the YouTube side as well. I had quite a lot of people in here watching, but only a few chatting. So again, let me roll through the public chats, as I cannot say your guys' names over there. But No Name, Spin, Bobby, Roca, Cheryl, thank you for hanging out and for chatting in the chats there. I really do encourage you, others who are watching but not chatting, to come on and chat sometime. We can have a little bit of fun, start really spicing this place up as we move forward into, I think, some fun trading to be had here soon. As soon as we get a little bit more compression and then re-expansion, it's going to be fun. Remember, compression to expansion is direction neutral. We evaluate it when it happens. Either way, it's going to be fun. Expansion is always fun because you're going to make money if you're in the right position. And if you missed out on expansion to the upside, you better be ready for either possible expansion to the downside. Again, on the daily, that would be mean reversion. On the weekly, but and or re-expansion to the upside. So, fun times. Enjoy it. And turn the damn leverage down. So that way you're not getting wrecked on a 30-second chart like what I'm looking at right now. All right, guys and gals. You have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. With all of that being said, I'm going to keep the tunes going. and put on the end screen here. We're going to do, let's see, we'll do till 12:35 Pacific Standard Time. And yeah, you guys have a wonderful morning, afternoon, and evening, no matter where you're in the world, of course. As always, stay safe and trade safe. With all of that being said, Landy out. Take care.